Good morning. Welcome to Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormiz. And at 11 o'clock, all market gains are intact. We're building on the momentum, bulls firmly in control. Towards the beginning of last week, there was a lot of sluggishness. Markets were correcting. There was volatility. But Friday and today, what a rebound we've seen. And it's good to see the mid-caps moving in step. The advanced decline ratio has about 2,200 stocks advancing for about 600 stocks declining. The Nifty, as we speak, is approaching 26,150. The Sensex is up 500 stocks. It's metals, IT, and defense names are now partying. The India Defense Index is up more than about 2%. Harmis, can we say it's the Santa rally?
It's the Santa rally indeed, and the bulls would definitely be hoping that that sustains simply because of the fact that participation is going to be lower, global cues are going to be lower as well because everybody goes on leave starting this week and the next week. Ourselves have a truncated week and we need to contend more so with 2 days of back-to-back expiries, considering Thursday being a holiday. So the Sensex expiry, which is the monthly one, gets pushed to Wednesday. But the broader markets, as Reema was highlighting, the market breadth doing well, looking good, and the broader market stocks as well are doing well. Jupiter Wagons is one such name, the top gainer on the small cap index today. It's some regards to the promoters buying some stake as the conversion of their warrants. The second straight day of gains for the stock. It is the biggest single day gain that the stock has seen since January of this year. The volumes are the highest in over 4 months already in the first 2 hours of the trading session, and more than 2.5 crore shares of Jupiter Wagons have already been traded today. The 20-day average here is just less than 3 lakh shares. So it shows the kind of volumes at which it is moving. The stock is nearing its 50 DMA at 298. The 100 DMA is at 316. So two important levels to watch out for. And it has not had a very good year, has Jupiter Wagons. It's down 41% despite this up move today. This is turning out to be the worst year that it has had since 2019. Sterlite Tech is the other name on the list today. A second straight day of gains for the stock. The biggest single day gain it has seen since June. The volumes are the highest in the last 3 months. And today's session itself is seen 50 lakh shares have been traded. 20-day average of less than 3 lakh shares. The stock has moved above its 50-day moving average or round about its 50-day moving average of 110. The 100 DMA comes up at 115. So closer by to some very key levels. And the stock is about to snap a 3-year losing streak of negative returns. That's up 32% so far this year. And lastly, shipbuilding stocks are doing well today. Phillip Capital came out with a bullish note last Friday and it's building on to those moves now. Almost 5 to 6% higher for Garden Reach, Cochin Shipyard and Mazgaon Dock. But the volumes are presenting a bit of a cautious picture and are not moving higher on very strong volumes as are the other names on the broader markets. Garden Reach volumes are still below its 20-day average. Cochin Shipyard and Mazgaon Dock, yes, but not as convincingly higher compared to their 20-day average as goes for the other broader market names, Reema.
Thank you very much for that. NIIT Limited has seen a spike. That's up close to about 14%. HCC is another one. Their 1,000 crore rights issue closes today. The rights issue price was 12.5 rupees, and I believe it's been fully subscribed, and that stock has seen a gain of close to about 10-odd%. Grow has been another big mover, 16-17% market capitalization, now crossing the 1 lakh crore mark. And in the IT-packed Saskin Technology, again, very large volumes. The stock is down 37% year to date. It's been an underperformer, but today Saskin Technology is trying to close the year with some strength. But moving on to KEC International, that is a big mover, stock up 4.5%. Vinny is here to tell us more about it. Vinny.
Hi, good morning. So KEC International, yes, passing away in trade after the Delhi High Court has stayed the Power Grid Corporation's order, excluding the company from participating in tenders for the company for a time period of 9 months. This had happened during somewhere in mid of November. That time, Power Grid had said that they are barring KEC International. Do not forget that time management had given a clarification saying that the share of Power Grid in terms of the order intake for 2025 was around 4% versus 27% last year. While in terms of the order book, out of the Q2 order book of 39,300 crores, Power Grid share was around 15%. Now, this is an important update coming in there because 15% of the order book was Power Grid. Power Grid gives a lot of orders that come in for KEC International as well. So the stay in terms of the order and for the company to continue to participate now in Power Grid's orders is a positive for them, and that is why the stock is passing in trade. Do not forget the stock had fallen sharply also when this announcement that Power Grid was barring them had come in. Now, obviously, the stay is a positive for them.
Indeed, 4% higher for KC International. Vinny, thank you for that update. By the way, just pull up Dilip Buildcon, just some flashes at the bottom of your screen a couple of minutes ago with regards to an order win. That stock has seen a bit of a spike in today's session. Now the stock is up almost 5%. As we speak, it's an order win that has come in. There you go, 4.5% higher on the stock for Dilip Buildcon after that order win. But MCX is the other one, and the stock was in focus a couple of months ago when the stock had crossed 10,000 rupees. What is now putting the stock in the spotlight? Sudarshan is here to tell us just that. Sudarshan.
So MCX has been in the focus for the last few months, and if you take a look at the stock, it's been hovering around the record high levels. And if you remember, recently some of the brokerages also have upgraded the stock, and basically the highest target price on the stock is around 12,000 rupees per share. Now the latest update is over the weekend. There was a commentary from SEBI chairman that he wants to see the participation in commodity derivatives from banks and insurance, and for the same he's in talks with both RBI and IRDAI, that is the insurance regulator, to increase the participation in commodity derivatives. And he has even set up the working groups to look into the increased participation in agri-commodities and overall commodity derivatives. Regarding the GST issue that commodity trading faces, he is saying that he is in engagement with GST Council to resolve some of those issues. And if it happens, it will help improving both market liquidity and also the volumes across the segments, including the gold. And that can be very positive for MCX. And also, both gold and silver prices are too at record high levels.
Indeed. So record high levels for MCX, 10,500. But Sudarshan, while you're with us, also talk to us about Dixon Tech, and that has slipped off the highs of the day. And there an underweight rating coming in from Morgan Stanley, one of the lowest price targets on the stock.
So Morgan Stanley has an underweight call on the Dixon Tech, and target price is rupees 11,563 per share. It's reflecting the stock price also. It has just come off the day's high, currently around 13,200. So from this level also, MS is expecting a sharper downside to the stock. And the reason it's saying that IT hardware import norms have been extended, and that might lead to a growth uncertainty for the stock. And because of this, other brands can continue importing under requesting and under the licenses and the disclosures, and that can be very challenging for Dixon Technology to meet the revenue guidance that it has given for the IT hardware. MS believes that IT hardware can contribute around 7% to its total revenue by FY30, but there is a downside risk to this estimate if these norms are further extended, and because of this, other companies start importing those hardware. So, negative note for Dixon Technologies.
Okay. Sorry, we will get into a break. Thank you very much for that. On the other side, we'll focus on the bond market with Manisha Gupta. Stay tuned.
India Bonds presents Bond Street.
Welcome back. Still 160 points higher on the index, in line with what the implied open was suggesting earlier in the day. And a lot of broader market names continuing to move higher. GE Vernova, though, is off the highs of the day. At one point was up almost 10%. It's cut its gains down to around 6% as we speak. The gold price is hitting record high levels, has had no significant bearing on both Manappuram and Muthoot. Manappuram is also trading off the highs of the day. Muthoot is also now in the red, 0.5% lower on Muthoot Finance as well. So that is the current market picture. And as promised, shifting focus to the bond markets. Manisha is here to tell us more on that. Manisha.
Well, thank you. On Bond Street, we want to talk about the company's bond issuances, and we've seen a slight decline onto that one because the numbers should come in on your screen On Thursday, it was a large $43 billion. But as you can see, by the time it was Friday, it fell to 9.2 billion. And today, it's expected at 11.25 billion. So we're looking at a bit of a slowing down in the markets, as it were. So when you talk about today and that 11.25 billion, if you break it down, it majorly comes in from Phoenix Arc, which is putting out an issuance of $3 billion there, 3 billion rupees rather, with 4 bonds there. Spandana Spurti is doing 4.25 billion with 3 bonds, and there's a reissue coming in of 2.5 billion, which is coming in from Crazy Bee Services. So this is what comprises of today's bond issuances from the primary market, from corporates, that is. When it comes to tomorrow, that is December 23rd, then you have more companies lined up. You have Power Finance Corp and Bank of India, which together plan to raise about 160 billion. Now, out of this 160 billion, 100 billion is what Bank of India alone seems to be getting in. So this is a big one that is coming in the markets, and this is scheduled for tomorrow. Power Finance is another one which is looking to raise 60 billion rupees through 2 different bonds there as well. And then you also are looking at major market movers into the market. Remember, it's near year end, and you're looking at slight upward bias, as usually is the case through the month end there. The volumes, major of them are seen in 2 to 3 year tenure bonds. Other interesting thing to watch out for is the mutual funds. Well, they seem to be selling 1 to 2 year bonds amid redemption pressures, and this is majorly ahead of those GST payments. The paper issuance that traded the most on the bourses, which is BSE and NSE as well, majorly comprised of Telangana State Industrial Infra Corp. It was Andhra Pradesh State Beverages Corp, which also has seen latest issuances that traded and did quite well too. And then you also have various other companies like Bajaj Finance, there is Tata Motors Finance, there's IFL Finance, Navi Finserv, which also did quite well on the bourses. And to add to this list, you also have Capri Global, NABA did quite well, Muthoot FinCorp, Agro Capital are some of the numbers or names rather which did quite well on the bourses in the day there.
Thank you very much for that. Statements from the Kajaria Ceramics conference call are flashing for you on your screen. The management reiterating the fundamentals of the company remain strong, trying to assuage investors on the back of that fraud which has come to light, about 20 crore being siphoned off by the CFO. No discrepancy. They have gone through the internal controls. They've reviewed all the subsidiary. As of now, at least, on the accounting front, looks like there is no discrepancy. Keep tracking that ticker fee. Get into the break. On the other side, we'll talk about market technicals, so stay tuned for that discussion.
CNBC-TV18 and India Bonds presents Bond Street.
Welcome back. The stock of the day continues to be Shriram Finance. MUFG bought stake in the company 20% at 840 rupees. And now in 2 days, Shriram Finance has gained 100 rupees above the deal price. 5% gain on Shriram Finance. Now, the question is, after this kind of a run up and re-rating, how does it compare with its closest peer, Chola? So, Gaurav has done some analysis on that. Gaurav.
Well, yes, MUFG is going to invest around 39,600 crores in Shriram Finance for 20% stake. Now, if you look at this amount, it is actually the largest FDI that Indian financial sector has ever seen. And at the same time, even if you look at the valuation at 841 rupees a piece, it translates into 1.9 times price to book value, which is again at attractive valuation as per the comparison with peers if we look at the NBFC space. In fact, after this, we saw brokerages turning bullish on Shriram Finance for 3 key reasons. First is that higher growth. Second is the lower cost of funds, and third is again reasonable valuation. In fact, we have got a bunch of brokerages like CLSA, IFL Finance, Jefferies, DAM Capital. All of them actually increased the target price above 1,000 rupees as high as 1,200 rupees a piece for Shriram Finance. But after that, on the flip side, we saw Cholamandalam Investments actually losing in trade, and there are some key reasons. First is that if you look at the valuation gap, Cholamandalam always had that valuation premium over Shriram Finance despite having a smaller book if you compare the AUM. And there were key reasons. First is, if you look at credit rating and the cost of fund, Chola always had this lesser cost of fund, and even if in terms of credit rating, let's understand, for example, for ICRA and for NCDs, which is non-convertible debentures, Cholamandalam had a AA plus positive rating, and at the same time, for the same NCDs, Shriram Finance had AA plus and stable rating. That is something that the differential actually was there, which actually brought the cost of funds higher for Shriram Finance. Second is that the growth guidance. If you look at Cholamandalam Investment, they are guiding for growth of around 20 to 22%. Remember, they have reduced their growth guidance, but it is still at 20 to 22% versus Shriram Finance, who is currently guiding for 15 to 17% growth. So the growth was also higher for Cholamandalam Investment. Third is that if you look at ROEs, for Chola, they trade the ROE is at around 18.5% versus for Shriram Finance for the first half of FY26, we saw ROE settling at 15.4%. But what is going to change after the deal as per brokerages, also as per the fundamentals? First is that cost of funds. Now, multiple brokerages believe that the cost of fund is going to come down, and the reason being that first is that fresh equity which is going to come up, and second is that because of the fresh equity we will see some credit upgrades. In fact, if you look at IIFL, they expect 100 basis point of decline in cost of funds, and at the same time Jefferies, they believe that this will actually make a case for credit upgrade as high as AAA rating. Second is that higher growth expectations. Now brokerages are expecting higher growth. In fact, we saw Nomura, who is expecting around 20% AUM growth from Shriram Finance going ahead, and at the same time we also saw IIFL, who are expecting 18 to 19% AUM growth going ahead. Third is that in terms of valuation, despite having such a large deal, that happened at a valuation of around 1.9 times. Now, there is some differential in terms of ROEs, and ROEs will optically remain low for Shriram Finance, but brokerages still believe that they will remain in mid-teens for Shriram Finance. In fact, IIFL expects the ROEs to go as high as 14.5% and ROAs to go almost by 4.5% in the next year. So definitely there is some room for growth in ROAs and ROEs as well. That is something which is actually hurting Chola Finance right now, because even at this price, Shriram Finance is trading at around 2.4 to 2.5 times price to book at FY27 versus Chola, which is still trading at 3.8 times. So the difference and the advantage which Chola had is somewhere narrowing, and that is the reason Street is not taking it in a good way. In fact, if you look at the stock performance in the last 1 month and 6 months, we have seen Shriram Finance going as high as 43%. But if you compare with Chola, that has gone up only by 2% in the last 6 months. So definitely that is something which is hurting the sentiment and helping Shriram Finance grow further in a trade.
Someone's loss is someone's gain. Gaurav, thank you for that update there. Shriram Finance, new highs for the stock today. 950 now almost. Brokerages going up to as high as 1225. There's potential upside of as much as 33% from Friday's closing levels. But of course, the stock already up 60% so far on a year-to-date basis. But of course, stay tuned, because the management of Shriram Finance will be addressing the media on this deal, this largest financial services deal in the country, at noon. So Umesh Revankar will be addressing the media, so stay tuned for all the updates from there. But good time to get in a quick chart check as well. Mehul Kothari from Anand Rathi Shares and Stockbrokers is now joining in. Mehul, good morning. Thank you for joining in. We have eventually surpassed that 20 DMA on the upside. But does that sustain, A? And B, does this mean now we have enough legs to go past 26,200, 26,300 before the close of the year? This is an area we have struggled a bit. Your call on the index and specific stocks as well.
Morning, Hormuz. Thanks for having me on the show. So Nifty has confirmed a breakout from the falling channel and is also showing characteristics of an inverse head and shoulder breakout. So this indicates a positive structural shift from here on. While today's gap may get partially filled in the short term, which is near 2600 or 25,950, but the broader trend remains constructive with dips towards 25,900. Offering buying opportunities, and I feel that a move about 26,200 might happen very soon. So once that happens, then this opens the door for 26,400 to 26,500 in this year itself. But since the past few weeks, we have been constantly mentioning that broader markets are likely to outperform, and that view is now playing out very well with improving participation across sectors, including defense and railways also. So meanwhile, what is happening is Bank Nifty is trading at the verge of a breakout, holding above key moving averages and presenting against the falling trend. And so resistance is near to 59,400. A decisive move about this zone can add further strength to overall market and Nifty. So overall, the view remains buy on dips.
Buy on dips. Any particular stocks you have on your radar?
Rima, a couple of stocks are there. First stock is Karnataka Bank. KTK Bank is showing a constructive setup after a strong impulse move and healthy retracement. So the stock can be bought in the zone of 206 to 203 with a stop loss of 194. With a move above recent consolidation can lead to an upside towards 216 to 224, which is our target. Another stock which we are liking is SAIL, that is Steel Authority of India. One can go long in this stock in the range of 131 to 129 with a stop loss of 124, and we feel that there could be an upside of towards 142 in the near term.
One final question, Mehul, before we let you go. A lot of these shipbuilders are doing well today. Garden Reach, Mazagon Dock, Cochin Shipyard, but volumes don't look very convincing, at least as of now. So do you see that this is a proper reversal, or would you use this opportunity to exit, especially considering the fact that these stocks have been beaten down 30-40% from their record high levels?
Since past couple of sessions, we have been quite bullish on all the stocks, in fact, including defense also. We feel that the bottom should be in place, and there is a high chance of pullback towards 200 dem and each and every stocks you named. Maybe it's Mazgao, GRSE, or maybe BEL or BAL, BDL. So all the stocks are now preparing for a pullback towards 200 DEMA. There we can review the position that whether it's just a pullback or a complete reversal. But as of now, we feel that a follow-up move is still pending in all these stocks.
Mehul, thank you for sparing time and joining us today with your views on the index and on specific stocks as well. Let's also get you views from Ed Yardeni, the president at Yardeni Research, on the market outlook, and he is expecting gold prices to touch $10,000 by the end of 2029. Listen in.
I think 2025 was a year of consolidation for the Indian stock market after having been one of the great outperforming markets for a few years. And I think 2026 could be a better year. It could be a year where the market moves to new highs. Clearly, we're going to have some resolution of the trade discussions between India and the United States. And I think that'll happen. Gold and the S&P 500 tend to be inversely related on a short-term basis, which makes gold a good way to diversify a U.S. stock portfolio of the S&P 500. The trend, however, is almost identical. And so I've got the S&P 500 getting to 10,000 by the end of the decade, by the end of 2029. And I think gold could get there as well.
Welcome back. 170 points higher on the index, still nearing that mark of 26,150, and every single intraday dip, as minor as it has been very swiftly bought into, and the index continues to remain around the highest point of the day. Good time to get in trends from the F&O desk, and Sudarshan is joining in to tell us exactly that. Sudarshan.
So not only Nifty, even broader market is holding on to the gains that we have seen in the morning or like opening trade, and it's reflecting the advanced decline ratio. NSE advanced decline ratio at this level is 4:1. And for Nifty, the F&O data is indicating that for now it has formed the base around 26,000 versus the earlier level that it was around 25,840. That was also 20-day moving, 50-day moving average. Now, if you take a look at the call options and the put options, on the put side, 26,100 and 26,000, both these strike rates have seen a sharp fall in the premium, while on the call side, the major activities that now we are seeing it 26,200, 26,250 and 26,300. So it tells you that on the downside for now, 26,000 seems to be the base. On the upside, Nifty can go as high as 26,300. So I've taken the support of 26,000, that is a 20-day moving average. Resistance 26,325. For Nifty Bank, support would be 59,140, that is the intraday low. and resistance would be 59,400. Some of the stocks that continue to see fresh longs, one is Solar Industries from the defense pack. All the defense names are high in the trade, but this stock is seeing fresh longs. KI Industries and MCX2 are seeing fresh longs. Fresh shorts, Chola Investment. Now, after the MUFG deal, Shriram Finance has been moving higher, so it seems that people are shorting Chola Investment and going longs on Shriram Finance. Emphasis, while IT stocks overall are moving higher, but one stock that is seeing fresh short is Emphasis.
Thank you. Even Hexaware is actually weak in trade. Hexaware is down close to about 4.5%. I'm not sure if it's a part of the F&O, but so if there are short build-up, but the stock is down close to about 4.5%.
757 on Hexaware. In fact, that's at the lowest point of the day now, and it's also hurtling down towards its IPO price, which was 708. So not good going for Hexaware. And Sudarshan pointed out a very interesting pair trade, as Gaurav was also highlighting. Short Chola, long Shriram. That's what is happening currently. Chola Finance now down to the lowest point of the day. And some interesting moves seen in a lot of these names. By the way, Jupiter Wagons is now up 13.5% as we speak. So continues to move higher. Of course, all of these names have been smashed from their record high levels, even RVNL for that matter. RVNL is up 4%, and that stock is down well over 50% from its July 2024 peak, which was close to 650 rupees. So it's been a bombed out name there as well as RVNL. Ramkrishna Forgings all through last week was at a 52-week low. Now seeing a bit of a rebound in today's session, 4.5% higher there as well. So some of these beaten down names making a bit of a move on the upside today, be it railways, be it defense, or an auto ancillary like Ramkrishna Forgings.
Which were the big ones? Were the lock-in ends this week?
Well, lock-ins, of course, there's IGI is one. The lock-in ends today is not seeing any significant move today. The stock continues to remain flat. But the other one that you need to watch out for, one of them is Sanathan Textiles. That's one of them. That lock-in ends on Friday. And a lot of these IPO rush names that came in during the month of August and September, the likes of Jaro Institute and Sheshasai Technologies, and all of these names which were down 38-40% from their issue price, they will see their lock-ins end. Even IGI is down 25% as well from its issue price of around 400 rupees. So that's the lock-in bit. But Unmesh Sharma from HDFC Securities is joining in now to take the market conversation forward. Unmesh, good morning. Thank you for joining in. A lot of those beaten down names making a bit of a comeback today. Any of them on your radar, be it railways, be it defense, or even an auto ancillary name like Ramkrishna Forgings, which was at a 52-week low all through this while?
Yeah, so look, there is definitely a relief rally going on, which is what we call the Santa Claus rally this time of the year. What's happened is that actually volumes have come off a little bit. Usually the foreign market participants also kind of slow down their activity. So we are seeing a little bit of that. I think it's also end of the year, so there will be some quarter end kind of activity as well. We definitely think going forward, while we don't cover Ramkrishna, but at the same point in time, what we've seen is that after while the index has been flat, the small mid caps have seen significant correction. So a relief rally in some of these names definitely on. In autocoms, the two names that we have in our model portfolio are Bharat Forge and Samvardhana.
Got that. What are the other big stocks or themes that you're very bullish on, Unmesh?
So, look, we think that this year, given what markets have been doing in the last 12 months, the three big sectors which we are very positive on is a continued positive view on banks. We also believe that the correction and, kind of sideways movement in consumer, both discretionary and staples, as well as IT sector, I think will start to kind of reverse. Now, the good thing is that these three are also heavyweight on the index. So that kind of makes us a little bit of positive to, let's say, flat on the index. But these are the ones that we like.
Particularly Shriram Finance, what is your assessment of the deal? And is there value beyond this 940, 950 level?
No, we haven't published our research on it. So unfortunately, I cannot comment on that due to compliance reasons.
Okay. And what about Chola? The street, as Gaurav has been pointing out, seems to be latching on to a trade, maybe tactical for now, but go long Shriram, but short Chola. Do you have a view on Chola?
Yeah. We are long term. We are quite positive on the name. I think recently we've taken it off the model portfolio, but yeah, long term we quite like this name.
What about these capital goods names, Unmesh? GE Vernova is doing very well today after that big order win. Analysts are expecting that size to be anywhere between 16 to 18,000 crores. Even GE Vernova, Siemens, any of them on your list?
Yeah, so Siemens, we are very positive. In fact, recently we came out with a very detailed report on the name. Our analyst Parikshat really likes that story as well as comments. I think the two themes I think which you are alluding to for the next year to a large extent is going to be this whole energy transition. And, the MNC type names, who are bringing that technology to India, I think seem to be in a very good place. So Siemens, Cummins are the ones that we have in our portfolio as well.
In IT, since you said you're bullish on IT, and IT seems to be making a comeback trade, I think the index must be up 15-16% from the October lows. From here on, where can value be created?
So the good thing in IT is that what's happened is that I think the whole AI euphoria seems to be dying down. So what was working against these names, as in they were seen as being negative, in this whole AI transition, that is now kind of starting to die out as, there are expectations that two things. One is that they are actually, AI is not going to disrupt things as fast as people think. And the other is that Indian companies will actually be at the forefront of actually implementation of AI. On top of that has been the weakening currency as well, which did not help them because of the AI thing, but now is kind of all coming into place together. So after a period of underperformance, I think the sector, we believe next year will make a comeback. Maybe not in a very strong way because we are as in kind of flattish on the index, but at least outperformer within that. We have an equal weight on NFI and TCS, and LTIMindtree is the name that we have in there in the model portfolio on IT.
What about the renewables, Unmesh? There has been a lot of talk about fears of an overcapacity concern, and then the note coming out from the MNRE. There's some rumors with regards to restricting lending as well within this space, the solar modules and PVs and so on. What about this space, A, and B, being the financiers to this space, be it the likes of the RECs, PFCs, or even the IREDAs for that matter?
Yeah, so look, I think while there is definitely a concern, but then as with anything, any theme which in India or globally where, just like AI, I think whenever something new comes about, there is always some pockets of excess there. At the same point in time, I think the longer term view that this is a theme, I think remains okay. Also, we believe that there is always going to be noise around the space, given the fact that globally the module manufacturers are basically the Chinese. So what happens is that whenever there is noise on the geopolitics, also you will see that. Net, however, we believe we continue to remain positive on the theme. We think that private sector lenders who are actually lending quite smartly on this continue to remain in a good place. It's not enough to swing the needle on the overall balance sheet, so it's a little difficult to play on that front. The sector-specific lenders on the public sector side are not in our model portfolio, so we will stay away from those. But that is for reasons beyond this. But we remain positive on the theme. We also believe at this point in time the geopolitical noise around India, China is also a little bit abated. So we believe that the best way to do this is to play it through the equipment manufacturers only, which is what we talked about just before this.
The street seems to be also very bullish on commodities. Base metals like copper, which have had a banner year, will continue to do well. Aluminium will be strong. What are your thoughts on metals and individual stocks, ferrous, non-ferrous?
Yeah, so look, metals has driven the earnings growth for this year as well as some of the upgrades. Going forward, we do not believe from a portfolio perspective it is actually going to continue to drive earnings as well as returns for this year as it did before. So we have a couple of the steel names in there, Jindal as well as Tata. We believe that this could be the year when the rally kind of moves out of the base metals and into the steel names, but to a large extent driven mostly by what will happen on the global oversupply offset by what production measures we take, and whatever is the domestic uptake of this. So from an infra real estate perspective, I think steel continues to remain something we like.
So you believe that the rally in Hindustan Zinc and Vedanta is done for, or they have enough triggers to keep going beyond just the base metal prices?
No, so we could say that as of right now, relatively, we think that the rally moves in the direction of steel.
Unmesh, thank you for sparing time and joining us today with your views on specific stocks and themes to watch out for going into the new year as well. Take a short break. More on the markets on the other side. Welcome back. It's a big week for a lot of these companies whose lock-in periods are ending this week, as Reema was just alluding to a few minutes ago. But let's look at all of those companies in greater detail, because there are 16 of them whose lock-ins end and 4 of them ending today. The value of those shares is almost 12,000 crore rupees. But the interesting bit is that almost 60% of them, or 10 out of those 16 companies, are shares that are trading below their issue price, and not 5 or 7% below, but at least 30 to 40% below their issue price. Now, today itself, we have had 4 companies whose lock-ins are ending, starting off with names like VMS TMT. You take a look at that, 47% below its issue price. IGI with the highest at among in terms of value. That stock itself is down 25% from its issue price. So, barring BLS e-services, which is also down from its post-listing high, most of these companies are trading below their issue price. Now, tomorrow we'll see 2 other companies whose lock-ins end, with Satvik Green and GK Energy. Now, for Satvik Green, the stock is down below at 15% below issue price, and GK Energy as of last Friday's close was exactly at its IPO price of 153 rupees. Now, on Wednesday, you have companies like Ganesh Consumer, DE Development and Atlanta Electricals, and now DE Development marginally above its issue price. Atlanta Electricals is up 25%. Again, another Ganesh Consumer is down 30% from its IPO price. Mind you, all of these are recent listings. It's not as if they have finished their year or year and a half lock-ins. These are just 3-month lock-ins that are ending. At least for Ganesh Consumer, it's a 3-month lock-in, as is for Atlanta. Now, on Friday, since Thursday is a holiday, that is the bigger chunk of 7 companies where lock-ins are ending. And look at the returns there. Solar World is down 23% from its issue price. Sesha Sai is down 35%. Jaro Institute is down 38%. All of them listed at the same time. Is this rush of IPOs that we saw post-August. These were part of those. And Sanathan Textiles, of course, that's a 1.5-year plus lock-in. That is one outlier among this list. That's up around 40% from its issue price still. And Concord Enviro is down 40%. ARS Infra is down 40% as well. Anand Rathi, that stock had almost doubled from its issue price. That has come off slightly, still holding on to gains of around 42% from its issue price as well. But the bigger talking point of the lock-ins ending, of course, does not mean that all of those shares will get sold in the open market, but it's just that the kind of price destruction that has happened over the last 3 months with regards to a lot of these IPOs, be it the list that we just saw or even a lot of the other IPOs. So the KSH Limited IPO, which was undersubscribed on Friday, listing tomorrow. So it'll be interesting to see what kind of listing do you end up getting. And of course, there's a long IPO pipeline that lies ahead as well in 2026. So it's a record year for IPOs. It's been a record year for lock-ins ending as well. We keep a track on all of these spaces as well. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back. We're counting down to the Christmas week and a few days to go before this year 2025 comes to an end. But it's time to also look ahead what lies in store in 2026. And Nigel is now joining in to tell us how the coming year will shape up for the steel companies and the industry as a whole.
Well, that's right. The big question is what's in store for steel in 2026? Well, in the near term, steel prices, they have weakened, and that's likely to weigh on margins for steel companies just in the near term. In India, the hot rolled coil prices, they're down by roughly around 8% from the September quarter. That's driven by lower Asian prices as well as the expiry of the interim 12% safeguard duty, which happened in early November. But that's where things start to get a little bit more interesting. Now, there are growing hopes that steel prices may be close to the bottom. And they say this because Asian steel prices, well, they are at near 15-year lows, almost 40% below their long-term averages. At these prices, these levels, spreads, well, they look unsustainable. And part of the street is optimistic of a recovery, especially if China's anti-involution policy leads to production or supply cuts. Now, let's turn our attention to the largest steel producer, which is China. China's steel production is down by close to 3 to around 4% year to date. But exports, they're up by around 6.5 to around 7%, and they remain elevated because Chinese demand has been weak. In fact, Chinese exports have crossed 100 million tons in the first 11 months of 2025 itself, and that continues to put pressure on steel prices. Turning to India, well, India's steel consumption has grown by around 11 to around 12% CAGR over the last 4 years, and growth of around 7 to 8% is expected in the times to come. At the same time, Indian steel companies, well, they are adding capacity, which means demand needs to keep pace to avoid oversupply. And that brings us to a key policy trigger. With Chinese exports high and export options limited, well, steel companies are hoping for the reintroduction of safeguard duty that expired in November 2025. Earlier in 2025, remember, the interim 12% safeguard duty helped domestic HRC prices trade at roughly around 9% premium to landed imports. But once that duty expired in November, prices, well, they have quickly converged with import levels. If safeguard duty returns, well, they could provide the much needed support to domestic steel prices. So heading into 2026, steel, well, it faces near-term pressure, but the setup could hopefully slowly improve with spreads near the bottom. Policy support will be in focus, and demand growth, as always, will be the key swing factor.
Indeed, we'll keep an eye out for the steel sector as well in 2026. Nigel, thank you for that update. Take your leave on this edition of Trading Hour from Rima and me. Thank you for watching. Halftime report on the other side.